Welcome to our podcast where we bring you the latest news in the world of cryptocurrencies and blockchain. Today, we have an interesting piece of news about the recent rally of Bitcoin and other cryptocurrencies. The U.S. authorities have announced plans to limit the fallout from the collapse of Silicon Valley Bank SVB, and this has resulted in a positive impact on the crypto market. Nike, can you give us more details about this news?
Sure, laying the line. So, the U.S. Treasury and Federal Reserve have announced a range of measures to stabilize the banking system, and they have said that depositors at SVB would have access to their deposits on Monday. This has come as authorities took possession of New York-based Signature Bank, the second bank failure in a matter of days. The stability measures announced by the authorities have helped the crypto market recover, with Bitcoin up about 8% from Sunday's lows, trading at $22,568. The miners Riot Blockchain and Marathon Digital, crypto exchange Coinbase Global, and software developer MicroStrategy Inc. have also rebounded from last week's lows to gain between 6.5% and 10%.
Wow. The fallout from the failure of Silicon Valley Bank seems to be the story of the moment in the world of cryptocurrencies and blockchain. Nike, what are your thoughts on this?
Yes, it's quite a big deal, laying the line. According to the latest news, SVB suffered a giant $1.8 billion loss by parking consumer funds in mortgage-backed securities, which took a hit due to the Fed's rate hikes. This led to a snowball effect as depositors rushed to withdraw their funds, causing a liquidity crisis that ultimately led to the bank's failure.
That's right, and the fallout from SVB's failure has had ripple effects across the market, including on stablecoins like USDC. Over the weekend, USDC lost its $1 peg and hit a record low on concerns over Circle's exposure to SVB.
Yes, that's true. But the good news is that Circle's CEO has reassured investors that its $3.3 billion USDC reserve deposit held at SVB will be fully available when U.S. banks open on Monday.
And it seems that the U.S. Treasury and Federal Reserve have announced measures to stabilize the banking system and backstop depositors' money, including the Bank Term Funding Program.
Right, and according to the joint statement from the Department of the Treasury, Fed Board, and FDIC, depositors will have access to all of their money starting today, March 13th.
It's a relief to hear that depositors won't lose their money, but it's also important to note that analysts are cautioning against assuming all is well with market sentiment after these measures.
That's a good point, laying the line. The situation is still evolving, and volatility looks set to remain elevated in the coming days.
That's interesting, Nike. So what about the stablecoin USDC?
Over the weekend, USDC had lost its $1 peg and hit a record low on Saturday on concerns over the exposure of Circle, the firm behind USDC, to Silicon Valley Bank. However, Circle CEO Jeremy Allaire has assured investors that its $3.3 billion USDC reserve deposit held at the collapsed Silicon Valley Bank will be fully available when U.S. banks open on Monday. Allaire also said that Circle's USDC operations will open for business, including with new automated settlement via their new partnership with Cross River Bank. As a result, USDC has recovered to 9,917 cents, closer to its par and up from last week's lows around 88 cents.
That's good news for investors in USDC. However, most analysts have cautioned against assuming that all is well with market sentiment after these measures. Alvin Tan, head of FX strategy at RBC Capital Markets in Singapore, has said that markets remain unsettled from the SVB failure, and the situation is evolving. But volatility looks set to remain elevated in the coming days. What do you think, Nike?
I agree with Dan's cautionary note. While the measures taken by the U.S. authorities have had a positive impact on the crypto market, it is important to remember that the collapse of two banks in a matter of days has shaken the U.S. financial system amid economic uncertainty. So, we need to wait and see how the situation unfolds in the coming days.
Definitely. It will be interesting to see how the crypto market responds to these developments. This news is quite concerning. Nike, Silicon Valley Bank, and Silvergate Bank's collapse within 48 hours has definitely shaken the U.S. financial system, especially during this time of economic uncertainty.
Yes, laying the line. And according to Robert Kiyosaki, the author of Rich Dad Poor Dad, a third lender might face the same fate, worsening the situation. Kiyosaki even believes that this situation would benefit precious metals.
That's right. Kiyosaki predicted the Lehman Brothers collapse in 2008, which was a defining moment that deepened the 2008 financial crisis. He has previously warned about a potential global economic collapse and suggested that bank runs could accelerate during the crisis.
Kiyosaki's warning about a potential third bank collapse coincides with ongoing speculation about the future of Credit Suisse, another investment bank with a focus on cryptocurrencies. Credit Suisse is delaying its annual report after an SEC call about its cash flow statements for 2019 and 2020. Shares hit an all-time low on March 10, 2023.
Yes, and real estate investor Graham Stephan shared last October that Credit Suisse could be in a critical moment, with its credit default swap CDS reaching the highest level since 2008. Economist and crypto skeptic Peter Schiff also warns that the U.S. banking system is on the verge of a bigger collapse than the 2008 crisis, and mass withdrawals could trigger bank failures.
It's definitely a challenging time for the financial system, and we'll have to keep a close eye on how this situation unfolds. By the way, have you heard that Euler Finance, an Ethereum-based non-custodial lending protocol, was hacked in a flash loan attack that drained hundreds of millions of decentralized stablecoins and synthetic 20 Costa Rican colones tokens?
That's insane. How much did the hacker get away with?
According to on-chain data, the hacker managed to steal nearly $196 million in DAI, USD coin, staked Ether, and wrapped Bitcoin.
Well, that's a significant amount. This is the largest hack we've seen so far in 2023. Do we know how the hacker did it?
Yes, it seems like the attacker used a multi-chain bridge to transfer the funds from the BNB Smart Chain BSC to Ethereum and launched the attack today. This attack also correlates with a deflation attack that happened a month ago.
That's interesting. It seems like the hacker knew what they were doing. Do we have any idea who might be behind this attack?
No, we don't have any information about who's behind this attack yet. But according to Zaxp, another prominent on-chain sleuth, the movement of funds and the nature of the attack seem quite similar to black hats that exploited a BSC-based protocol last month.
That's concerning. It looks like we need better security measures in place to protect these decentralized finance platforms.
Absolutely. It's crucial to have strong security measures in place to prevent these kinds of attacks. It's a reminder that we need to be vigilant and continue to improve the security of these platforms.
Friends, are you ready for a new interesting review? Today we'll be discussing one of the most popular decentralized exchanges out there, PancakeSwap. Yes, that's right. PancakeSwap is an automated market maker and decentralized exchange built on the Binance Smart Chain network. And just like other AMM-based exchanges, it allows users to trade cryptocurrencies without intermediaries and set up liquidity pools where users can provide liquidity in the form of their digital asset holdings to earn yield in the form of a percentage cut of the trading fees.
That's correct. And one of the biggest advantages of using PancakeSwap is the low transaction fees, thanks to Binance Smart Chain's cheap transaction fees. That makes PancakeSwap much cheaper compared to other AMM-based decentralized exchanges.
Absolutely. Another advantage is the wide variety of tokens that can be traded on PancakeSwap. You can find many tokens existing on Binance Smart Chain and some from other networks, like Ethereum.
Right. And liquidity provider incentives are another big pro. Users who provide liquidity to PancakeSwap pools can earn rewards in the form of trading fees and cake tokens. And those cake tokens can be staked to earn more rewards with huge APR rates.
However, there are some cons to using PancakeSwap. One of the main risks is the potential for smart contract exploits. As with any other decentralized platform, malicious actors can exploit smart contract, which can lead to users losing their invested funds.
Another issue is that not all trading pairs have the same level of liquidity. So, Executing large trades may be harder for some pairs compared to others.
Despite those cons, there are still many ways to earn on PancakeSwap. You can provide liquidity to various liquidity pools or stake cake tokens. Liquidity providers earn a percentage of every trade on the pool proportional to their share of the liquidity in that pool, plus other bonuses.
And staking cake tokens allows users to earn additional cake tokens with high APR rates as rewards over time.
So overall, PancakeSwap is a great decentralized exchange to use, with its low fees, wide variety of tokens, and incentives for liquidity providers. Just make sure to do your own research and be aware of the potential risks.
That's right. Always be cautious when using any decentralized platform. Well, that's it for today's episode of our podcast.
We covered some pretty significant news in the crypto world, including the SVB bank failure and the Bitcoin and stablecoin price situation.
Yes, and it's clear that these events are having a significant impact on the market. Investors are understandably wary, and stablecoins in particular are struggling to maintain their pegs.
But on the bright side, it's heartening to see that regulators and issuers are taking steps to address these issues. The Fed's Bank Term Funding Program is a good example of this, as is Circle's efforts to maintain the safety and redeemability of USDC.
Absolutely. And as always, we encourage our listeners to stay informed and do their due diligence before investing. This is a rapidly evolving market, and it's important to be aware of the risks.
Thanks for joining us today, and we'll be back soon with more news and insights from the world of crypto.